Good evening, everyone. This is James coming to you for Tuesday, 8:59. It's almost 9 o'clock, so we'll get started just a tad bit early. We do this every Tuesday, every Thursday, and on Friday just before the market closes. Now, what are we doing here? We're talking about dividend stocks. What specifically? Dividend stocks that you can invest in to give you a monthly, consistent, safe cash flow. Now, this strategy has been used for over 400 years. It first came about back in the late 1590s, late 1590s, when some businessmen got together and they wanted to create a big company and they needed to come up with money. How else do you come up with money? Find investors. What are you going to give the investors? You give them a little bit of the profits. So what they did, they went door to door, asking people to invest in this big company so that they can create the biggest shipping company ever, called the Dutch East India Company. That's what it was, the Dutch East India Shipping Company. It was the biggest company on the planet at the time. They even had their own army, they had their own currency, they had their own police, they had basically everything. They ruled supreme for almost 200 years. Wow, that's a long time. Anyway, they went door to door offering shares of the company to people, to anyone who had money to invest. If you had some money and you wanted to get a return on an investment back in the 1600s or 1590s, actually the first stock started selling, and I believe in the early 1600s, 1601, 1602, something like that. But anyway, the promise was, you invest in our company and we're going to give you a share of the profits. We're going to divvy up the profits. That's probably where they came up with the word dividend. I'm not sure. It's just a guess. What do I know? I don't really know. But anyway, we do this 2 or 3 times a week. We talk about dividend stocks, specifically the ones getting ready to pay out their dividends. The dividend is nothing more than a portion of the company's profits. That portion which they give back to the shareholders or the stockholders or the investors, whatever you want to call yourself. If you own the company's shares, the company's stocks, by the date of record, then you are entitled to a dividend. What the dividend is going to be, who knows? But every year, right on the earnings, they let you know, excuse me, the corporation comes out and tells you how much money they earned. They do that on their annual reports. How much money they earned per share. Earnings per share, that's where it comes from. And they take those earnings per share and they divide it up into however many dividend payments they want. Now, some companies pay dividends every quarter or every 90 days. Some companies pay dividends twice a year or biannually, and some, very few, pay annually, just one time a year. Once a year they pay out the dividend to their investors. Now, there's also companies that pay a dividend every single month. That's cool. But what we're doing here is we're showing you different companies every single day that are getting ready to pay out a dividend. Why do we do that? Well, because we found that there's some certain criteria that happens on a consistent basis with dividend stocks, specifically certain stocks. So what did we do? We created some software to isolate and find out exactly which stocks do a predictable move every year without fail coming up to the dividend date. And that's where we came up with our dividend investing strategy. So let's get back to our dividend stock talk and let's actually show you some samples of what we're talking about. Excuse me. All right, so let's just jump right on in. And we are going to look at I'm trying to get rid of this cold. It's not even a cold anymore. From what I've been told by my doctor, it is a post-nasal drip syndrome. Allergies, basically what it is. I've been coughing for 5 months, and they told me it's allergies. So I get a spray, I get a little pill, I take that. But every once in a while, it still comes out, especially when I start talking. All right, so let's see where we are. Now, I've been showing you every day that I'm on here, 2 or 3 times a week, only 2 strategies. One is a dividend on steroids. That's when we buy and we look to get a certain percentage out of the the stocks increase. Now, that's been working out pretty good for us so far. We got 15% for the first quarter, which is not bad at all. It's a very safe, very secure, and very easy strategy. You're just buying the stock, changing the price, and then reselling it for just a little bit more than you paid for it. Basically, a set it and forget it type thing. Now, the idea is to get in at a certain time based on what the software tells me and the consistency of the company. As you can see, we have Colgate-Palmolive, Macy's, MasterCard, and STX. I don't even know STX. I think they're a real estate investment trust. I'm not 100% sure. But anyway, those are the only companies that we have at this moment in this account. Now, we usually don't like to hold on to them for more than 10 days, but we still have MasterCard and STX. We've been holding on to them for about a month. We've collected quite a bit of dividends on them, and we might actually end up holding them for the next dividend date also. Not 100% sure. As you can see, MasterCard, we're looking to get 114.39 out of it, and it's only at 112. That's not good. Macy's, we're looking to get 33.10, and it's at 28. Macy's took a big dive quite a while ago, and as you can see, Macy's, we're down $6,100 on Macy's. That's a lot, but then again, we get 1,621 shares. So we'll probably end up holding this for a while for it to recover that $6,000 again. As you can see, Colgate-Palmolive is up $700. It'd be nice. We're looking to get 74.91, and right now she's at 73.62. I don't know. Kind of tempted to take that $700 and run, but I'm not going to. What I'm going to do now is I'm going to show you the option trades that we made. Before I do that, let's go over and see how our stocks have worked from today, being the 4th. Okay. Now, today being the 4th, which means we would have gotten in 10 days ago, and we would have been out. Today would have been our 10th day for the stocks I'm about to show you. So 10 days from today, 28th was 5 days. Would have been the 21st. So our let me think. What am I trying to say here? Our indicator or our notice to get in. Oh, excuse me, 1 second. Would actually be the 21st of March. That's our indicator to get in on this list of stocks from tomorrow, which would be the 24 stocks. It's on tomorrow's list. Okay, so tomorrow is the EX day, which meant today was the last day you would have been able to get in on these companies before before the EX date, which is tomorrow. Okay, so these 24 companies right here, you would have had to have gotten in on the 21st. So we're going to take a look from the 21st to today and see how many of them, I'm not going to do all of them, how many of them actually meet our criteria. Okay? Okay, so we're going to start off with GD, which is General Dynamics, and we're looking at 84 cents for General Dynamics. Now remember, we're going to go in at the 21st, look at the 21st of March. GD. Now, General Dynamics, lovely chart. Isn't that look wonderful? General Dynamics starts out the year at 131, slides up a little bit to 145. It takes about a month and a half to do that. Another month and a half, she's back down to 134. Another month and a half, she finds a trading channel. She goes sideways for about 3 months. Now she's at 152. From 152, right around election time, now General Dynamics is a big defense contractor. So right at the election time, she goes from 152, she jumps up to 167, and then she jumps up again to get a trading range of 175, which she trades for 2 months. Jumps into another trading range of 190. She goes sideways for the next 2 months. Right now she's at 187. So we're going to go back to the 21st. And there it is. Now, the 21st, we're looking for 84 cents. So, did it do it on the first day? Because as you can see, it don't look very promising. Okay. It opened up at 192.35. Okay. And the high of the day was 193.16. You know? So what's 80 cents in that? 115. Oh, wow. She was off by 2 or 3 cents. Because if you add 84 cents to the one, see that? Then these numbers are here. This is the opening, this is the high, this is the low, and this is the close. Okay, so if you got in at the opening, the only way these are going to work is if you get in at the opening. Okay, if you're looking at it and you wait for a chance to get in, then you never know when you're going to get in. I don't know if that makes any sense. I always do my trades the night before, so I usually always get in at the opening of the day. So whatever the opening of the day, that's the number we're going to use, because that's what I use. If you want to sit there and look at the computer and watch it for an opening, that's fine. But I'm giving you these statistics based on how I would have traded it. Okay? So GD had everything looked good, all the charts, all the software, and everything looked good. We would have got in at the opening. And the opening, 10 days prior to today, was the 21st. Okay? Today was the 10th day. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, sorry. 22nd. Right, because today is the 10th day. So you'd have gotten the signal on the 21st, but you wouldn't have been able to get in until the 22nd, which would have been the 10th day. So this was day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, and day 10. So you would have been out by today, because tomorrow is going to be the first day the stock trades without the dividend attached to it. So this does look a little bit different. So GD, 84 cents. All right, she opened up at 188.88. And the high of the day was 190.13. So that's over $1.20, 33, 35 cents, $1.35. So it actually made it there. Monsanto, we're going to do Monsanto next. MON. Alrighty. Monsanto starts the year off at 87, goes sideways for a little bit, shoots up a couple of points, goes sideways for a little bit, and then she gets into a trading range between 109 and 100. Nice little trading range. She goes sideways for almost a whole year. She ends up the year at 105, jumps up into this other trading range where she's at now at 114. She's been going sideways for quite a while. Now we're looking at the 22nd, from what I understand. That's 21st, 22nd. Okay, that's our 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Alright, so tomorrow, like I say, is the EX date for all these companies, for all these 24 companies. Okay, all these 24 companies, the EX date is tomorrow. So if you wanted to collect these dividends, you can't. The only thing you can collect tomorrow is Thursdays. There's 23 on Thursday. Okay. It's 23 on Thursday. Oh, look, we got Verizon, AT&T, DR. I don't know who those are. UW, don't know who that is. I don't know a lot of these. Intuit, I know that one. All right, anyway, if you want to collect a dividend, just collect a dividend, then tomorrow you have to get into any of these companies right here. There's 23 of them. All right, Friday, there's 7 of these companies right here. DG, which is DG is Dollar General. Dollar General, I love them. I think I made money off of Dollar General this year. I got in, got my money, and I got back out again. Okay, so let's go back and run down just a few more. Now, Monsanto, we're looking at 54 cents. Don't even need to bother right here. 112. The high was 1 112.78. The high was 113.45. That is a 45 and 22. That's 67 cents just in that one day. Okay, so she opened up here and she goes up 67 cents. But look at this. Next day she's higher, higher, higher. Make a nice little high there. That's a nice little profit. But anyway, that's where she is now. So General Dynamics made it. Monsanto made it. BMY. Let's take a look at that one. BMY. Now I'm just showing you these things right off the top of my head. I'm not saying that I would have gotten into these because I'm just showing to you real quickly, and I'm not going through all the software and all the criteria. I'm just showing you how it would have played out for some of them. Okay, BMY starts the year out at 65. It takes about 3 or 4 months for it to hit the high of the year at 76. Went sideways for about a month, and then she had a drop from 75 all the way down to 61. I mean, that's what, a $14 drop, I think. Yeah, $14 drop. But that's not it. She continues to drop until the end of October. Okay, then from there she's going sideways between 48 and 55. Okay, to end up where she is today at 54. Now she had 5 down days in a row. Okay, but BMY is looking for 39 cents on the 22nd. Here's the 22nd here. What did I say, 39 cents? Okay, she opened up at 55.70, and the high of the day was 56.42, so that is a 72-cent move. Okay, so that made it. So the first three already made it. Okay, TSLX. Now, TSLX, lovely chart. That one's gorgeous. Okay, she starts out the year at 16.18, goes sideways for about 3 months, and then from there she shoots up to an $17, $18 trading range. She trades that way for about another 2 or 3 months, jumps up, goes sideways again for the 18.5, and then from there, the beginning of February, she makes the high of the year right at today. Today was actually the high of the year for TSLX. Now they're only looking for 39 cents on the 22nd. Okay, the 22nd she comes in at $20.02. Opened up, the high of the day was $20.10, which is only an 8-cent move. How are you going to get 39 cents from an 8-cent move? But luckily enough, look at this thing. It goes sideways for 5 days, and then we open up here. All right, 2002, and then she's right here, 2028, the high of the day, and it's still not making our target price. I'm wondering if this thing would even be on our list. There's hardly any movement here at all. Okay, so she's at opened up at 2002, and we're looking for 39 cents. So that's 2051. Now wait a minute, 2041. We're looking at. Yeah, 2041 is our target price. Hit there? No. 2041? No. No. High is 2012. High 2028. High is 2040. But we need 2041 to actually be out. And there it is, 2045, which is 8 days later. Wow, 8 days to make that 39 cents for TSLX. Now, like I said, I'm not sure I would have traded it or not because I didn't put it in through all the software. Okay, so I'm not really actually going to do that at the moment. I'm just going to go over some of the positions that we're in and show you where we stand. Okay, let's do one more, and then we're going to jump over to show you what's coming up tomorrow and Friday. That's in case any of you guys want to actually do any of those trades. So we just looked at ROP. No, we just looked at TSLX. Now looking at ROP. All right, ROP is another lovely looking chart. She starts out the year at 180, goes sideways for almost 9 months. She's still at 180. She slowly increases up to 191. Then there's a big jump between 192 and 206. That's a nice little jump. She goes sideways for a while. Where she is now at 206.83. And I'm only looking for 35 cents on the 22nd. There's the 22nd. All right. Yep, there's the 22nd. Okay, it opened up at 208.67. and the high was 209.53. So that's almost 90 some odd cents. So that definitely made the 35 cents for that time period. Okay, just to give you an idea how that works. I mean, those are the ones going EX tomorrow. Can you get any of that money? Nope, sorry. You would have to have already bought it yesterday, the day before, the day before, the day before, whatever, because you have to own it at least 2 days before the date of record. And that's usually the EX date. You'll buy it before the EX date, and you have to hold it for 2 or 3 days until the date of record, because you have to wait for the clearing. Now, a lot of people think you can buy the stock and the very next day you can collect the dividend. No, it doesn't work that way, because you have to have held it for at least a minimum of 2 days. Okay, because in order to get on to be a registered owner, you have to go through clearing. Okay, you buy it, you wait 2 or 3 days. Now you are the actual official owner. If you buy it for 15, 20 minutes, grab a profit and jump out, you're not a registered owner. Okay, you just bought it, made your money, and you bailed. Okay, so they're looking for registered owners. That's anyone who bought and held for a minimum of 2 days before the date of record. And that's usually the EX date. So let's not talk about the rest of these guys, because nothing you can do about those. Now Verizon, that's right at the top of our list, because we're going from the highest dividend down to the lowest. I don't do anything below 10 cents. So these two right here, wouldn't even do those. But any one of these, what we do, we'd come over to this little top right corner, click on that, and it allows me to export the file, all these, rather than enter, because years ago, before they had this option, I had to enter each one individually, one at a time, into the software to find out who's doing what. Nowadays, I just export the file, cut and paste the list right into the software, and it takes less than 5 minutes for the software, and that's with the cutting and pasting, because you have to export the file. Then if you take the file's downloaded into your computer somewhere in a spreadsheet, you cut and paste it, put it right into the software, and it takes the software 2 or 3 minutes to spit out all the answers from you, and then from that, boom, you should get an answer, no problem at all. All right, so these is what we're looking at tomorrow. Let's take a quick look at Verizon, VZ. All right, Verizon starts the year off at 54. She's all over the place. She starts out at 54, drops down to 49, jumps back up, past 50 for the high of the year at 56. And then she drops down 3 or 4 months later to hit the low of the year right around election time. So we're coming into the election, and Verizon's dropping, and all of a sudden, here we are at election, and Verizon's at 46. What is it, a month and a half after the election, she jumps from 46 up to 54. That's a nice little move. Then she drops back down to the 48 area and goes sideways for the rest of the year. So here's where we are right now with Verizon. Now, if you want to collect the dividend of Verizon, you have to get it in first thing tomorrow morning. Because not first thing, but anytime tomorrow, you jump into Verizon. How does it look? She looks okay. I mean, she's nothing grandiose about it. Like I said earlier, look, Verizon's all over the place. She's basically going sideways between, 54 and 47, something like that. Just going sideways, so it's no big deal. What you might want to think of continuing to take a look at is this right here. Now, this is the seasonality. It tells you how this thing reacts on a consistent basis year after year. Now, this red line here represents the average move over the last 10 years. Now, you can reset this data here by going over the 10 years and entering it that way. Okay, so right now I'm looking at 10 years worth of data, one set on top of another, and this is what Verizon usually does. She usually drops down a little bit in January, the second week of January. And then from there, she goes all the way up until mid-July. Then from mid-July, she drops down and goes sideways for the rest of the year. But right now, where are we? We are here, 4-4. And what usually happens around 4-4, this thing drops in the next 2 weeks. Now, I'm not saying that's what it's going to do. Make sure you hear me correctly. The blue line right here, this represents what is happening now, or what happened yesterday and the day before and the day before. This red line represents what happened last year, the year before, the year before, the year before, 10 years worth of data all piled on top of one another, and it averages out. This is what it does usually. Okay, so usually over the last 10 years, at this point, Verizon goes down. So do you really want to jump in and hold on to it for 2 weeks to see if you're going to be able to capture that dividend? Because if you buy it tomorrow, you're going to be able to holding it for, let me think, tomorrow will be 5th and the 6th, and you'll be out. You'll be able to resell it around the 7th, which should be Friday. But as you see, it's dropped from the price from where it is now to Friday, and then you have to hold for another 2 weeks before you break even, and then another week or so before you can actually start making money off of it. Hypothetically, because that's what the software says. You know, is it going to happen? Don't know. If you're basing your decision on what has happened in the past, then yes, buy it, hold on to it for 3 to 4 weeks, and then you make your money off of it. Now, do you want to buy it just to capture the dividend and then get back out for a profit? Probably not. Only because with our dividend capturing system, we want to get in, capture the dividend or the equivalents within, a day or two, get out and then jump onto the next stock. Now, do I mind holding onto Verizon for a long period of time? I don't mind. Verizon's not going anywhere. They're a big company. Everybody knows who they are. They make billions of dollars. But that's not what I'm looking for. I'm looking for the quick hit, small bite. Thank you very much. Be on your way. Okay, so that's what we're looking at. Let's jump into DRI, see what they're looking at. See, DRI is offering 56 cents and see what they look like. Let's jump back and see what DRI looks like. Back to the standard chart. DRI, which is Darden Restaurants Incorporated. I've never heard of Darden Restaurants. Sorry, Darden. Don't know who you are. Okay, Darden starts the year off at 66, drops down a little bit to 63, trades for about 2 months, jumps up a little bit, trades that range, and then drops back down and trades 1, 2, 3, 4, almost 5 months worth of going sideways in the $62 area. Right around election time, she goes from 62 and jumps up to a trading range of 73. That's like a $10 move. That's a nice little move. She goes sideways for a little bit, and she makes the high of this year today. Today she makes the high of the year. Okay, is this something worthy getting into just to collect the dividend on tomorrow? I honestly couldn't tell you. Why on the 28th did this thing gap up from 75 to 80? Why the big move? I don't know. Might be something you want to think about. Had you bought it 10 days ago, that would have been a nice move, right? Because remember, we buy these 10 days in advance because the dividend is coming up and we think that we're going to actually make money off of the dividend or the fact that the dividend is coming. So with that being said, let's jump and take a look at the seasonality to see if this is worth something you're getting into. All right. For tomorrow. Now this is where DRI is at the moment. The crosshairs showing you right here, which is 4-4. As you can see, the red line, this thing looks like she's going down for the next couple of weeks. So do I want to buy it and capture that 56 cents? No. I would have wanted to get it a couple of weeks ago, the 10 days prior to the EX date. But with that being said, let's move on to the next one. That's DRI. Okay, DRI doesn't look too favorable. Now UW, okay. Oh, UVV, that's a tough one. UVV. All right, UVV starts the year out in a trading range, between 52 and 59, and goes sideways for about 9 months. And right around election time, it's a slow increase to make the high of the year, the beginning of February at 83. It drops back down to settle into a trading range right around the $70 area where she is now. This part of the chart looks good because you get 3 months of upward movement, or 4 months of upward movement. That looks great. Okay, let's look at the seasonality on this. UVV. Here we are now. Again, I'm going to have to shy away from this one. Had I bought it a couple of weeks ago, 10 days ago, yeah, look where she was 10 days ago. And here's the 4th. 10 days from now was probably the 21st? Oh, 22nd. Okay. Somewhere in that area. See, that's where you would have been. All right, let's get out of this and let's jump on into the options, because a lot of you are liking what the options are doing. Because although the dividend on steroids is at 16% and it looks like she'll be hitting, I'm hoping, 50% this year, that would be great. The option strategy is just going crazy. So let's quickly jump over to there and take a look at what we're looking at. Okay, option strategy, work at this. We're at 38.9, which is not bad. 38.9 is a lovely number. Now, we've incorporated options and we've incorporated, the dividend investing. Now, dividend investing is a little bit different than the dividend capturing. Dividend capturing is where we buy the stock, hold it through the EX date, capture the dividend, and turn around and resell it. Dividend investing is where we jump in 10 days prior to, and we look to capture the dividend amount before the dividend is actually paid out. So what does that exactly mean? All right, let me quickly show you Market Watch. Okay, today is April 4th. All right. Now, any stock I want to do this strategy with is going to be 10 days out. So 10 days from today wouldn't be the 18th because there's no trading on Saturday and Sunday, so you don't count those. Wouldn't be the 18th because it's after hours. It was before hours, then yeah, it would be the 18th. But no, it's after hours, so first trade I can be able to make is tomorrow. So 10 days from tomorrow is the 19th. So who is trading on the 19th? There's 8 companies trading on the 19th. So let's quickly take a look at them. Now, normally, I would take all 7 of these companies. There's 8, but I will only take 7. You know why? Because this bottom one right here is 5 cents. Do I really want to invest my time and efforts for a 5-cent dividend? No. Well, let's quickly see what SM looks like. SM, it's a $23 stock. Do I really want to invest a $23, $24 stock for a 5-cent dividend? No, I don't. Sorry. So we're going to take the rest of these companies. We're going to, now there's only 8, so there's no need for me to export the list and then use that spreadsheet. It's only 8, so it's easy just to pump in 8 stock symbols into the software. Do that and let the software tell you what it's going to do. I can tell you right off the top, I do have positions in Colgate-Palmolive, I do have positions in CVS, and I do have positions right here, and Horizon. So I have positions in almost all of, well, half of these. I already have them. And I'm going to go back and show them to you in a second. All right, so this is what's going to pop up for tomorrow. So this is this right here is tomorrow's list. Okay, because tomorrow before market closes, it's 10 trading days. So tomorrow is the 5th. Okay, and these things are paying out there, are going EX on the 19th right here. See that EX is the 19th. The date of record, dividend record date, or date of record is the 21st, which is Friday. Which means if you want to take advantage of these companies, these 8 or 7 companies, you have to buy it anywhere between tomorrow morning and the 19th. So you have to buy it before the 19th. So anywhere between here and the 18th, because you want to be out by the 18th. 18th is the last day, because you want to be out before the EX date. All right, so this is the companies we're looking at. Now remember, I told you I have a position in APA, Apache. Now APA is like all over the place. She starts out the year at 46, jumps up into a trading range of 55, goes 55 for about 3 or 4 months, drops down to the 50 area, goes a month for that, then jumps up to 58, goes sideways. She starts dropping back down. Oh, she hits the high of the year right there, December 12th. Hits the high of the year, 68. And then from there, it takes her 2 months to come back down to that low of 49, 42, which she's been going sideways in this little trading range now. She's at 51.89. Okay. Does this look good to jump into? Well, all the numbers look good so far. I mean, this is just the 1 year chart. Okay, look at this. You get support down here, support here, support here, support here, support here. So you have these support points. Now, what does support mean? It means once it gets down to this area, people start buying it, and then it starts going back up again. This could be support here for it to go up or continue sideways. I don't know. Don't really care. What I do care about is what does it normally do? Okay, so what can we think about this thing doing for the next couple of weeks? Because we only want to be into this for a couple of weeks. Let's check out the seasonality. Okay, here's where we are now. 4-4. Okay, now as you can plainly see, this is where we are, right about here. Now, do I want to hold this thing for a week or so? I don't mind, because it's a steady sideways upwards trend. You know, sideways upwards. If that makes any sense to you. It's going sideways, but it's going up a little bit. So to capture a dividend, that would be okay, because the dividend is only 25 cents. It's not a huge one. Now, what I really like about this is that we can get weekly options on APA. Okay. Now APA, let's go back to the standard chart. Okay, this is where APA is right now. It's at 51.89. Okay, so 51.89. We could buy the spread, the 50.51. Let's see if we can buy the 50.51. Let's change this. Come on. Okay. Now the 50.51 is not really worth it, because it's costing 4 cents, which 94 cents. So the most I can make off this is 6 cents. Do I really want to invest that much money for a 6 cent profit? No. But you know what? I would do the 51 and a half. That's 35. That's 15 cents profit. Now, as long as the stock stays above, all right, what we're looking at buying the 51, okay, and then selling the 51.50. What does that mean? That means the only amount that I can make off of this is between 51 and 51.50. So it's only 50 cents profit there available to me. And how much is it costing me? It's cost me 35 cents for that small bit of profit. It's not a lot, but 15 cents is almost 50% of the 35. So I'm paying 35 cents. The most I can make is 15. That's the absolute most I can make on this trade. Now, what has to happen in order for me to make that 45% return? The stock has to stay above 51.50. So this is what I try to tell people, one of the beautiful things about option trading. Hey, stocks move 3 different ways. They move up, they move down, or they move sideways. Now, if you can pick out a strategy where you can make money in each one of those, okay, so if I bought just an option, the stock would have to go up in order for me to make money. If I bought the stock would have to go up for me to make money. The nice thing about this option here, the 51 and a half option, the spread option, is the stock can stay the same and I make my 45%. the stock can go up and I'll make my 45%, or the stock can go down and I'll still make my 45%. But it can only go down to 51.50. Now it's at 51.89, and it has a dividend coming up. And let's check and see what the seasonality is on it, just so that we can refresh our memory. Now, seasonality on this says right here where it is now on 4.4. This is where we're getting in. Now remember, we want it to go up, stay the same, or go down just a tiny bit. And what does the seasonality say it's going to do? It says it's going to go sideways still. Okay, is that a guarantee? No, it's not a guarantee. So listen closely. If you don't mind owning APA, then buy it. Okay, if you want to just collect the dividend, fine, that's true too. Or if you want to invest in the option, there's a lot of options you can buy, and there's a lot of strategies. Just to show you quickly how many strategies there are out there. Okay, these are all the strategies you got. You got the single, you get the vertical, the back ratio, the calendar, the diagonal, the straddle, the strangle, the covered stock, the collar synthetic combo, the butterfly, the condor, iron condor, the vertical roll, the collar with the stock, double diagonal, unbalanced, deep and wide. I mean, look at this stuff. It's just a huge, the amount of crap you can do. Do I know all of it? Yeah, I know most of it, but I don't know all of it. Do I care? No, I don't. I'm only here to make 1 or 2% per week. That's all I want. I'm not greedy. I don't have a lot of time. I don't want to spend all day. I don't want to spend all hours in front of the computer. No. This trade right here, the software tells me, number one, it's a weekly option, so I can trade it every week up until the EX date. Because after the EX date, I don't want to get in. I don't want to deal with it. What else is it telling me? Oh, it tells me how often it has done what I'm looking for over the past 10 years. That's another good one. And how many days am I looking to be into this trade? So the software tells me what I need to know. Now what it doesn't tell me is what's the best option trade to do. Now this one here, let's go back to where we were. Back to the standard. Okay, now we see what the stock has been doing for the year. Okay, basically for the whole year, you could basically say this is going sideways. All right, she starts out, like I said before, at 47. She jumps up to the trading range at a trading range of 54. She trades in the 54 area for about 3.5 months, 4 months. She drops down for about a month in the $50 area. She trades for a month there. Then she jumps back up, trades for another month in the $58 area. Then she jumps up to 64. The next month she goes from 64, she slowly drops down to 56, and she shoots back up again, trades for a month up in the $66 area, and then from $66 back at the end of the year she drops all the way down to this new trading range, a new trading range of $50 or $51 for the last what is that, 1, 2, 3, 4 weeks. For the last month she's been going sideways. So this is where she is now, and she has some good support down in the 49.5 area. So you have a lot of indicators telling you one thing. Software is telling you another thing. Seasonality is telling you a third thing. So that's 3 pluses right there. Now, the strategy I'm showing you now is what we call a vertical spread. It's where we're buying one option and we're selling another option. The only money we can make is the difference between what we bought and what we sold, and that, my friends, is only 50 cents. So whatever the stock does, it can shoot to the moon, and we're only collecting the 50 cents. It can drop to the floor. Only thing I'm losing is the 50 cents. That's the beauty of it. You're locked in for how much money you can lose, and you're locked in how much money you can make. The nice thing about the money you're making is it's 45%. I'll give you a quick little thing. All right, here we go. All right, it's costing me $365 to make this one trade. That's what it's costing me. And how much can I make off of this trade? The maximum amount I can make is $150. That's not a lot. So let's get out of here for a second. And let's go down and let's do 50 contracts. Okay? 50 contracts is going to cost me $1,800. and I can make $750. Now, funny thing about this, or the great thing about this, is there's only 3 days left. There's Wednesday, Thursday, Friday. So if this stock can stay where it is, go up a little bit, or even come down, what is that, 39? You can come down 39 cents. So it's go up, stay the same, or come down a little bit, and I'll still make that's almost 45% profit. I can make $750, and it's cost me $1,800. Okay, so let's shoot that one in there. So that's on the list for tomorrow. So you see how that works? I'm going to show you one more and see what you think. Colgate-Palmolive, CVS. CVS is a good one. Looking at 50-cent dividend of CVS. CVS. Now, CVS, you might take a quick look at it and say, wait a minute, this doesn't look good, because for the 1 year chart, it really doesn't look that good. But there's a lot more to the equation than just the 1 year chart. She starts out the year at 103, goes sideways for about 2 months, drops to another trading range of 95, that for 3 months, and then from there, slowly drops right to the election. Wow, look at that. Right around the election, she makes the low of the year at 69. Then from there, she jumps up to a trading range of 79, and she goes sideways ever since. So this is where she is now. She's at 77.87 now. Now, CVS does have, weekly options. Okay, but basically it looks like she's in a trading range, she's going sideways. So what does she do seasonality-wise from where we are? Here we are right here. Over the next couple of weeks, what can we look at? All right, from where we are, it looks like she's going to drop in the next week or so, go sideways for about another 3 weeks. So I'm going to say no to this one, because that's not where I want to put my money. Because remember, there's only 3 days left. It's 3 days left in this week, and this is a weekly option we're looking at. So I'm going to say no to CVS. I know CL has Colgate-Palmolive. They have weekly options also. So let's go back and see if we can get a trade in on Colgate-Palmolive. All right, Colgate-Palmolive, another one of those stocks. The chart looks like crap. Basically a sideways chart. All right, she starts the year up 71. She trades in that range for like 3-4 months. Jumps up to 74. Trades sideways for another 3-4 months. And then from October, she drops all the way onto this trading range down here, 66, goes sideways. And then right around the middle of February, she jumped from 67 up to 73. And for the last month and a half, she's been going sideways at 73. So let's take a look at what Colgate-Palmolive may end up doing for the rest of the next couple of weeks. Here we are here. Look at this. This looks lovely. The next couple of weeks. Here we go. Now, we're at 4.4. All right, that's where the lines intersect, right there. That's sideways with an uptrend. That's what we want to see when we're doing this type of spread trading. So let's see what the spread trading for Colgate-Palmolive looks like. Okay, Colgate-Palmolive's at 73.62. That would be this one right here. And she's at 41 cents, so the most we can make on this is 9 cents. Now, to be totally honest with you, it's not worth my while. Okay, so what are we going to make off this one if we did this one? Okay, it would cost me $420, $425, and I'll make 90 bucks off of it. That's not even, that's about 20% or 22%. Now, some of you might think, hey, 22% is not bad for 1 week. I mean, for 3 days. That's it. That's what you're looking at. You're looking at 3 days. Okay, let's blow this up a little bit more and see what she looks like. Let's get out of there for a second. 22%. I don't know if I can go for 22% for the next couple of days. Okay, she's at 73.62, and it looks good for 3 days. I don't know. Do I want to do 22% for 3 days? I'm not 100% sure. Isn't that terrible? That can't be right. See if that's right there. That's a 72.5, 73. That's way down here. Getting my 22%. Heck, I'd take 22% over that. What's this one? Okay, let's see this one. Okay, what we're looking to do is it's a 72.5, 73. That means the stock has to stay above this point right here. And we make our 22%. Okay? 22% works for me. So let's do that one. Gonna make it worth my while. Colgate Palmolive. Let's see what we're looking at. All right, it's gonna cost me $2,200 or $2,100. Gonna make $450 off of it. So, like I say, that's about 22%. Okay, so 22%. There you have it. Okay, that's basically it for now. I mean, I showed you how to do it. If the stock, we're going to be going over this again on Thursday, and then first thing, and then at 3:30 on Friday. So if you want to come back and check with us then, to see how the stocks are looking, probably give you a better idea. Because right now it's only Tuesday night. We have all day Wednesday, Thursday, and then Friday. We usually do the last calculations at 3:30 on Friday afternoon to find out exactly where we are, what we have to buy, what we have to sell in order to preserve our cash flow, conserve our money. Because like I said, right now we're shooting at almost 39%, and we're at the beginning of the second quarter. The beginning of the second quarter, and at 38% for the year so far. That's great. Anyway, this is James. I'm signing out. Let me first quickly check and see if I have any questions before I buzz on out of here. And I have no questions. That's wonderful. Alrighty, so I'm out of here. You guys have a great day, and I will see you Thursday and